Weekly trades with precision, gold, silver, and commodity setups broken down with full transparency, wins and losses included. This is the Golden Nugget with Verified Investing.
Welcome back to the Golden Nugget. Now, I have a pretty good idea of where I think silver and gold could be potentially going, and I'm going to give you that price target and price prediction and where this run may actually stop, okay? And if you've been here on the Drew Wolfer channel or even the Verified Investing channel, I've been talking about these levels for quite a while, so you may already know, but if you're here and you are new, welcome to the Golden Nugget. I am Drew Wolfer, a verified pro trader and commodities expert at Verified Investing. A lot of people are out here talking about $5,000 on gold. I think there's a base case that 4,500 could be the top, and we might not even get there. We have to see what's going to happen in the charts, though. A lot of people are talking about $70 with silver. I'm going to show you a few things that line up on the chart at the $67 to $68 level that might actually front run what those people were talking about. Now, the one thing I will say, at these highs, especially when we are in price discovery mode, all-time highs, you have to bring in other factors to try to figure out where the tops and the supports may be. So that's exactly what we're going to do in this video. So without further ado, let's get into the commodity compass, which is our first segment in the Golden Nugget. And this is going to tell you what is driving the broader metals markets, gold and silver, and the financial markets right now. So the first thing that came in was jobs data, and it actually showed that we put in 64,000 unemployment jobs, unemployment claims, right? So this was a problem because it came in over expectations, right? And unemployment actually came in at a 4-year high of 4.6% in November. The S&P services and manufacturing PMIs both came in lower than expected. So this is all of these factors are pumping gold. They should be, at least, but gold is capitulating right now. Silver absolutely went parabolic. Pretty crazy, right? Now, the Fed interest rate decision last week was to cut 25 basis points, okay? And buy $42 billion in short-term U.S. treasuries, thus kind of injecting liquidity into the markets. This is almost like miniature quantitative easing, and this is usually reserved for recessions, right? So it's kind of odd that they did that, but their commentary was a lot more dovish than most people were thinking that it was going to be. But they did say that their first line of defense is not going to be rate cuts in the months to come, right? And they will have to see what the economic data looks like in January and then in March at their next two Fed meetings, okay? Retail sales, it came in flat, 0%, and showed no growth, okay? Now, that was in November, and prior to that, we had, I think, 0.1 was our forecast, so it actually came in less than what we expected. And then the Empire State Manufacturing, it actually came in at negative 3.9 instead of the forecast of 10, and then the previous survey was actually 18.7, so this was a massive decline. Now, let's get into segment number 2, which is called the economic calendar. Okay, so let's talk about everything that's going to happen in between this week on the Golden Nugget when you're watching and next week when you show up faithfully, and we appreciate you for always showing up every single week to the Golden Nugget, whether you're here on the Verified Investing YouTube channel or the Drew Wolfer YouTube channel, the Verified Investing Twitter, the Drew Wolfer Twitter, wherever it is that you're watching. We appreciate you because we would not have a platform without you. Now, tomorrow we are going to have jobless claims and CPI. CPI is going to move markets, okay? Just watch out for that. We have our final consumer sentiment on Friday, okay? Then on Monday, there's nothing, all right? And next week is a holiday week, so just be cognizant of that. We have on Tuesday, Q3 GDP numbers and consumer confidence, and then on Thursday, it's actually Christmas Eve, and then on Friday is Christmas, so just be aware of that whenever we're, looking and going through the markets, all right? Now, we want to get into the Golden Nugget and then get to our TA, talk about our trade that killed it last week, and then talk about the trades and, the analysis where I think we could be going from here on both gold and silver. So let's get into my favorite segment, which is called the Golden Nugget where I give you out a golden nugget from my golden opportunity training that I filmed and brought out in conjunction with verified investing. And if it's something that you want to get into and you want to kind of understand how my 91% win rate inside of 2025 works, that is exactly where you're going to do it. I believe it is the first link in the description. But let's talk about something that is called the rising wedge. Okay, so I'm going to bring this up on the futures chart. It's much easier for us to see it on the futures chart, so that's exactly what we are going to do. So give me 1 second to bam. Okay, so this is called the rising wedge, okay? And what's happening inside of this wedge is you're seeing, you've got your highs up here, right? You've got your high pivot point, you've got your low pivot point, right? So you can see we've smacked into this thing at least 3 times and we just hit it, right? We come down here, boom, boom, and as you can see, each time we go up less. Each time we go down less, right? So we pump up less, we fall less. We pump up less, we fall less. And this is actually squeezing, okay? And the next resistance point could be right there at the all-time high, and you could see it hit this, get a swing failure pattern, a potential bearish divergence in between these two highs right here. Let me go ahead and get this stuff off of here, right? This high and this high have a nice bearish divergence on the RSI, meaning that price is going up and the peaks on RSI are going down, right? So when price is doing this, RSI peaks are going down, and then you could see a nice fade. And then if you lose this, you're probably going to have a pretty precipitous fall, at least to about $4,200. And then if you lose that, coming down here to about $4,000 to $4,050. Okay, so that is essentially the way that the falling wedge works, right? You're just squeezing and tightening in between two trend lines that are getting closer together, and then a big decision, it has to be made. And that is actually happening on the gold chart. So let's see what happens, but that is a very bearish pattern. We'll just put it like that, especially that it is happening at all-time highs. So let's go ahead and get into our next segment. And this is where it becomes game time, baby. The silver snapshot. So we're going to go to silver, and I'm going to show you the trade that absolutely killed it for us last week. Give me 1 second to pull it up. Boom, and bam, right there. So we gave out this trade last week on the Golden Nugget. We literally gave this out live. It was, price action was like right there at it. I believe this is where the Golden Nugget aired. So you could have gotten in here. You could have gotten in on the second back test. And then we gave out the price target to about $64 for a full take profit. And boom, hit it perfectly. Look at the risk to reward on this thing. By the way, we have to zoom so far in to figure out what the risk to reward is. It's kind of insane, okay? 106x risk to reward, meaning you could have made, for every dollar you spent or risked on this, you should have made about $106, which is a pretty insane way to trade, right? If you think about that. Now, this was a 6.5% move up in literally, let's see how long that took. Less than a day, 21 hours. Now, we did not get our secondary entry. We did not get to catch this move on the way back up because we came within about 50 cents of retesting this and then taking that trade all over again. And obviously, we just rejected from the $66.32 range, okay? As you can see right up here, which I believe this is the 3.0 Fibonacci, okay? So let's go to the trades, and we're going to speed run these because these are essentially the same trades as last week. There's only one extra trade that is not already something that you saw last week. Actually, in order to save time, I would encourage people to go and watch the Golden Nugget from last week as well so that they can, see all these trades, but let's talk about them, right? So we have our long down here, which is going to be your naked VWAP bounce, which is right here, this naked VWAP, and the 2.618, right? So if we can get a back test of that, you would be longing up to about $62.85. You would have two entries, one at $60.11, a second entry near 59, okay? So you got to think about averaging in on that one. Now, secondarily, we have this one right here, $54.85 at this naked VWAP, and then we also have $53.90 at the 2.236. That's, you could see a bounce there, right? Now, we obviously have this one way down here. This is where we get into the weeds, right? Because like, are we going to come down to $50 anytime soon? No, so we're just going to speed run these. $50.14 if you get a bounce there, 46.64, and then $44 and $42, right? So let's talk about the shorts. This is the trade that's kind of been added since last week, right? And that is an SFP at these highs, and I will show you why. Because we're running into the 3.0 Fibonacci. If we get an SFP, swing failure pattern, and a bearish divergence here, this is a pretty good shorting opportunity in my opinion. Also, if you get under this 2.618 instead of bouncing from it, that's a pretty good shorting opportunity. This would be a good continuation opportunity. If you lost this naked VWAP and lost the 2.236, you would be continuing to short downwards, right? And then again, if you lost this VWAP, this naked VWAP right here, and the 2.0 level, that's a pretty good continuation shorting opportunity as well as the 1.618 and then obviously the 1.786 that we just saw. And yeah, I mean, 1.5 fib is way, way, way down here. We're talking $42. So we're not going to talk about all of that, right? I want to show you where I think that silver could be potentially going and might potentially be topping out at, right? So, because that's what everybody's here for. They want to know, where does this run end and where can we see it pull back to, right? So, if we go to the hourly chart, okay, I'll show you where our first market structure breakdown would happen, okay? So our market structure breakdown would be at $61. So anything above $61 right here is still bullish. We have a naked VWAP right here at $63.30, and we have a single print right here. Massive, massive move up. Has not been mitigated in the slightest yet. So I would be favoring a pullback down to at least $64 to see what's going on. I'll show you why, okay? Now, past that, right, we also have, as long as we stay above $57, we're still in a bullish market structure from the 12-hour up to the daily, weekly, and monthly, okay? Now, let me go ahead and show you what's really going on, okay? So let's look at our FRVPs. Now, this is our first FRVP. We took it from the bottom, right, to the top. Okay, from the bottom to the top. As you can see, this is a fixed range volume profile, and it is giving you a price target of around $59. That's just the value area high. This thing is incredibly overextended. When you get outside of these value area highs, this is where you could be potentially pulling back to, right? Now, the other second FRVP that I'm seeing is this run right here, from all the way down here all the way to the top, and even that is giving you that $64 range. Past that, guess where you're looking at? The point of control is right at $59. So $59 to $60 could be a nice little range, and then you've got your obvious support at 57, and then your obvious support at 54. Now I want to show you a couple of other things really quick that could line up and show you where the top is, and we might be hitting it, right? So as you can see, if you pull this trend-based Fibonacci extension on the futures chart, right? This is on the futures chart. You pull it from the low back in 2020 to the high in 2021 to the new low in 2022, it showed you exactly where we were going to be going, right? Here's the 1.0. We got caught up at it. Then we used it as support, blasted through, got through the 1.618, got through that, used it as support, blasted through all the way up to the 2.618, and now we are rejecting there, right? Another Fibonacci that if you look, we got to go to the monthly chart to look at this one. We are actually front running the 1.618 right here from the literal 1970s bull run, right? So we're now getting up to the 1.78 or 1.618, which is at $68.57. So $67 to $68 is going to be a huge, huge line of resistance in my opinion. I'm going to show you this on the daily chart, a couple of other things that line up with that pretty well, okay? So this is my December parallel, okay? If you come down here to the 4-hour chart, you can see it a lot better. As you can see, this thing's been incredibly well respected. Where's the next resistance on this? You guessed it, $67 to $68 to my first proprietary deviation zone. Now, if we go to the October 2025 parallel, we are rejecting from my secondary deviation zone right here. My second deviation zone is incredibly intricate, and it's $67 is the top on that. Now let's go to one more parallel, which is from 2008 to 2025, and the top on that, you guessed it, $68. And then we have one more parallel I can show you, which the top on that is actually more like $68.50, $68.70, okay? Now let me show you one more thing, which is going to be our ranges, and boom, if you look at this local range, right, from this low to the new high before we obviously set a newer high, we now have resistance here at $67 and $68 to the first proprietary deviation zone that I have. Now, second, if you look at this run up, right, from here, right here, to the new top before you kind of put in some bullish consolidation and moved up again, you just rejected at $67 from the bottom end of the first deviation zone, and the top end of that, it's the second deviation zone, I apologize. The top end of that is at $68.67. Now, if you look at the October one, same thing, $68.40. So in my opinion, and this is just my opinion, $67 to $68 is going to be a massive resistance on silver as it sits right now. So just watch those levels coming into next week, and let's get into the Golden Nugget and the gauging gold segment, all right? Because that's what a lot of people came here for as well. They want to see where gold is going, right? So let's show you what is happening with gold, okay? So we know about this rising wedge, right? Now, the one thing I want you to understand is if we go here to the daily chart, you can see a lot of the same things happening, right? So let me pull up my parallels, and there are two parallels that I would really like for people to look at, okay? And let's get this rising wedge off of here. So if you zoom in on this parallel, you can see, bam, right? Like we've hit it 3 times, we've hit the bottom a bunch of times, and if you look at where the resistance is, it's right at $4,434 and exactly $4,500. Now, past that, you've got about 47, I believe. It's the top of the, yeah, about 46 to 46.50, right? So there's going to be a lot of confluence up here at about $4,500, right? Now, this parallel brings you all the way up to about $4,800, so that's a little bit different. But if we look at the December 2024 parallel, guess where it's bringing you? $4,500 to the top end of the parallel and a potential rejection. And this is what that parallel looks like, right? Now let's look at the December 2023 parallel that's even bigger, right? Where is the next resistance on this? Well, we're in the first deviation zone, the second deviation zone, $4,500. Absolutely insane how these levels of confluence line up with each other. Now let's look at some ranges, right? So we have our range from right here, this low to this high, right? And we got to get down to the 4-hour chart. I'll show you the run up on that and why that is a significant move, because this was a parabolic move up, right? Parabolic move up. And as you can see, we are rejecting, or we're having a hard time staying above this first proprietary deviation zone. Where's the second one? $4,450 to $4,500. Now let's look at the fade that happened after that, right? So the fade from here to here, right, which was a significant pullback, we just bounced from that deviation zone's bottom, the very first one. We are now outside of the range, super overextended, and guess where our resistance is? 4,400 to 4,450, right? And now let's look at one more, which was this big run up right here, nice run up. And as you can see, we are rejecting from the first deviation zone. And if we somehow get through that, 44.80 to 45.34 is where we could see gold potentially going, okay? Now, this I want to also look at is an FRVP, okay? So if you look at your double top FRVP, you could see a pullback to anywhere from $4,300 to $4,200. Now, if you lose this level, it is most likely that you're going to come down here to fill this gap right here at 41.50 and then potentially bounce from the bottom, which is the value area low, at 4K, and that's where you can start thinking about getting back in some longs. And as you can see, more confluence there showing those exact same levels, and we are rejecting from the value area highs right now with the point of control just below us at 42.40, and that is on this big range up. If you measure from the bottom to the top here, that is the value area of that entire range. Absolutely insane. We have a lot of stuff lining up that says 67 to 68 could be it on silver. There's no guarantees that it is. This is a public service announcement. Just because you see a bunch of things line up, all at the same places, Fibonacci levels, parallel channels, all those different things, does not necessarily mean that you're absolutely going to be guaranteed those are the tops, right? Same thing with gold. Does not matter. Does not mean that 4,500 is the exact top. You could see it going to 5K. You know, there is a base case for that, but what I'm seeing is there is going to be resistance at those levels, and those are levels that we absolutely need to take into account and, you know, be aware of. So if you like analysis like this, obviously, make sure that you hit the like button for us. Make sure you subscribe to whatever channel it is that you're watching, whether it's my channel, whether it's Verified Investing's channel. Subscribe to both if you can, and we appreciate you so much for showing up. Hopefully, we see gold continuing to pump into 2026. I would like to see it kind of get a nice pullback so that we can re-enter some pretty decent sized longs and then ride it up. And if you want the trades that I give out every single day, get inside of the Smart Money Commodities service where I give out trades on gold, silver, natural gas. We just killed it on natural gas. It was like a 20% move down. Oil, you know, the grains, platinum, palladium, copper, all of it. So if you want those, you know, calls, go ahead and get into Smart Money Commodities, and we will be more than happy to have you in there. Everybody have a wonderful day and have a wonderful holiday week coming up next week.
Imagine waking up every day with freedom. No boss, no clock, just you, your charts, and profit stacking. That is the life of a verified pro trader, and it's exactly how I built mine, by learning to trade gold the right way. I've helped countless members start winning, and now it's your turn. This is your golden opportunity to trade like a pro, live like a boss, and take advantage of the gold super cycle that is transferring wealth like we've never witnessed before. So make this your golden opportunity.